So, which is okay, at least they made effort. So, let's discuss it today. So, this is November 2024. And what the examiner is looking at is for you to prepare consolidated statement of profit or loss and other comprehensive income for the year ended September 30th, 2023. And they are ready to give up 20 marks for that. And also, it's asking us to calculate consolidated goodwill of Buga and also consolidated foreign exchange reserves. That is, if there are any foreign exchange gains that needs to be computed, you should also compute it as at September 30, 2023 for 6 marks. So the guy is giving you 26 marks for this question. And what's the question itself talking about? So the question is looking at, it says Buga PLC operates chains of bakery in a country which sells various types of bread, whole wheat bread, cassava bread, and cake bread. The company's accounting year end is September 30th. On October 1st, 2022, Buga PLC acquired 80% interests in the ordinary share capital of Kumasi Limited, a company that produces and distributes wheat located in Ghana. Buga PLC has no other subsidiaries. Can you hear me clearly? Or I can see that somebody said my line is breaking.
I think it's their network because, I can hear you clearly from my end. Maybe others can confirm too, please.
Now, we're given the draft financial statement of Buga and Kumasi Limited in their local currencies. And they are as follows. So we're given statement of profit or loss and other comprehensive income for the year ended September 30th, 2023 for Buga and Kumasi. So apparently Kumasi is in Ghana. Buga is a Nigerian company. So they gave us their statement of profit or loss, and they also gave us their statement of financial position also. And they gave us some additional information. The first additional information, this talks about Buga PLC paid 7 million Ghana cedis, 7,000 million Ghana cedis for its investment in Kumasi. As Kumasi Limited is not a listed company, Buga PLC intends to use the proportion of net assets method to value NCI. 2, Kumasi Limited prepares its financial statements using Ghana GAAP, although there are similarities between Ghana GAAP and IFRS. There are differences in pension accounting and deferred tax, which is not recognized under Ghana GAAP. 3, in the year ended September 30, 2020, Buga PLC bought wheat from Kumasi for 5,880. Buga PLC paid for the wheat on delivery, and there was no debt owing to Kumasi Limited at the end. As September 30, 2023, Buga PLC inventories include 360 million naira of wheat bought from Kumasi, and Kumasi charge markup of 30% on cost of sales. 4, Buga PLC other operating income comprise a management charge to Kumasi of 1506 for management support given to Kumasi Limited. This charge was paid by Kumasi on September 30, 2023 and is included in Kumasi's Limited's operating expenses. In future years, there will be no management charge as it is expected that Kumasi Limited will not require Buga PLC management support. 5, Kumasi Limited has a 2,000 taxable trading loss arising in the year ending September 30, 2023. The Ghana tax law allows tax trading losses to be carried forward only against future taxable profit. Kumasi Limited is expected to make a taxable trading profit next year. Kumasi Limited accountant has suggested that the Ghana Tax Authority could investigate the ON 506 management charge billed by Buga to Kumasi and challenge the recovery of Kumasi tax loss. The tax rate for Buga and Kumasi is 20%. 6. In October 2022, Kumasi Limited set up defined contribution scheme for its directors and has accrued a contribution of 1132 for the year ended September 30, 2023. The contribution was paid to the pension fund in October 15, 2023. Under Ghana GAAP, pension contributions are recognized directly in reserves through other comprehensive income. Tax relief for pension contribution is claimed in the year in which the cash is paid to the pension company. 7. On April 1st, 2023, Buga PLC made an additional investment in Kumasi Limited when it provided a loan of 3,200 for Kumasi with interest payable at 5.25% per annum in arrears. Buga PLC does not require repayment for this loan in the near future. No adjustments have been made for this loan other than to include it in Buga's non-current assets and the rate of exchange at April 1st, 2023. Kumasi Limited has recognized the loan in non-current liabilities. No entries have been made in either company in respect of interest on loan. Interest is taxed on an accrual basis. 8. At October 1st, 2022, there was no differences between the fair value of Kumasi's limited net assets and carrying amount except for the valuation of land owned by Kumasi Limited. PPE include land at cost of 3,120, which had a fair value at October 1st, 2022 of 4,640. The directors do not intend to sell the land. Ghana GAAP does not allow evaluations. 9. The following tax rules apply to PPE in Ghana. No tax is charged on disposal. Depreciation is liable expenses for taxable purposes. Other information. ₦1 to Ghana cedi exchange rate were as follows. So at the beginning of the year, which is October 1st, 2022, ₦1 equals 5.4 Ghana cedis. April 1st, 2023, ₦1 equals 4.4. September 30th, an average rate also was given. Then we are required to prepare certain statement. Okay, so what I've done is to do my first reading, just to have an idea of everything that this question is talking about. So the reality is that you have around, and these are many marks. If you do 26 times 1.8, that will give you an idea of the number of minutes you have on this question. So you don't want to waste too much time because there is high likelihood that you might not be able to finish if you waste a lot of time. And you don't want to spend over the time that you can spend on it, on this question. It will affect other questions and you might not pass the exam. Okay, so if I were you, out of these 26, I'll just be going for if I can get half of it, worst case. And I will not even start it as my first question because there are section B, section C. There are theoretical questions, things I can play around with. I won't start with this one, except if I've seen it before. If it's a question I've solved before, they now repeated that same question, and I know exactly what to do, then fine. In exam situation, except you're so used to it and very familiar with it, that time is not sufficient for you to solve this. It's not, to be realistic with you. So you need to be very smart with it. And how are you smart with it, right? So all this additional information, I've read it, right? So why I read it once is just for me to I'm already having an idea. The one I know how to adjust, the one I will not know how to adjust. I'm already thinking about it. That, okay, this one I can adjust it very fast. This one I can. So when I'm doing my workings, the one I don't know, I will just do one or two things, few adjustments, I'll move on. If I don't know it, I'll just leave it and move to the next adjustment. Then prepare my statement. What is important is you're doing something. Don't say you want to make it perfect. It has to balance. It doesn't have to balance for it to even be a prize winner self. It's if you are smart about it. These are additional informations. Just adjust what you can adjust. The one you don't know, leave it. Then, but make sure you prepare your statements. Don't leave the question one. Make sure you do your consolidated. We do not mark your figures here. Nobody cares about your final answer. We care about your methodology and steps. So, and that's the approach we're going to be using. Now, the first additional information, I'm going to read it again. This talks about the parents. Apparently, Bugap acquired, if you look at the second paragraph, on October 1st, 2022. Apparently, that's the beginning of the year, or of this current year we are in. Because if you look at this statement, the title of this statement of profit or loss, you see that the year end is September 30th, 2023. That's the year end, which means that the beginning of the year is this 1st of October. And it is that period that Buga acquired 80% holding in Kumasi. Apparently, NCI is 20%. Like, you know me, I don't pay unnecessary attention to group structure. I don't even do it. It's clear, it's 80%, or NCI is 20%. I can write it down, okay. Buga has 80% in Kumasi, NCI is 20%. Move on. I don't pay unnecessary attention to group structure because it's clear. They have written it for you there in the question. Now, that being noted, I can then start adjusting my points. So he paid 7,000 million for that 80% in Kumasi. Apparently, they didn't tell us anywhere that Kumasi is not in Nigeria, but from the currency, I can see that, okay, yeah, they told us in Ghana. Yeah, they told us that Kumasi is located in Ghana. Okay. So from the currency also, we can see that the guy is located in Ghana. So it's not a listed company, and Buga intends to measure NCI at proportionate share. Proportionate share. So that's all for workings one. So Buga acquired 80% in Kumasi and NCI is 20%. And the date of acquisition, he acquired it on October 1st, 2022. Still on that one, the purchase consideration, this one was given clearly in the question. He purchased it for 7 million Ghana cedis. But if you check the statement of financial position of Buga, the third item that they wrote financial asset, investment in Kumasi, you see you have 1296. That's the Naira equivalent. That's the Naira equivalent of that 7,000. Okay, which is the same thing as, because the guy is in Nigeria, the other guy is in Ghana, so he has to pay in that Ghanaian currency. So since he acquired it in October, he will have sourced for that money. If you look at the exchange rate as at October, it's 1 naira to 5.4. So this is not necessary. I mean, I just want to confirm something. Can you do 7,000 divided by 5.4? Does it give that 1296 naira?
Yes, sir.
Okay, good. So that one is the purchase consideration. I'm just noting it down because I will need it for my goodwill. So that's all for that workings 1. Now, workings 2, Kumasi prepares its financial statement using Ghana GAAP. Obviously, he's in Ghana, so he has to use Ghana GAAP. So he said, although there are similarities between Ghana GAAP and IFRS, but there are differences in pension and deferred tax, which is not recognized under Ghana GAAP. So apparently, this is more like things you need to correct in the accounts of Kumasi before you can consolidate. Before you can consolidate that. Because if you need to consolidate, your accounting policy has to be in sync. The way you treat items in the way you treat similar transactions or transactions in your account has to be the same, right? So in Ghana GAAP, they do not recognize deferred tax. That therefore means that as far as this question is concerned, any transaction where there are temporary differences, any transactions where there are temporary differences, you need to calculate deferred tax on them and recognize it appropriately in the books of the guy in Ghana, Kumasi. Okay. We're also told that the way they treat pension is different in Ghana GAAP. So we need to look at it and account for it in line with IAS 19. Everyone here has been taught IAS 19. So basically, that's what this one is really talking about. I saw that somebody said our figure should be 37,800. No, you're not multiplying, you're dividing. Okay. Yeah, exactly. Thanks, Shinwe. You're dividing. So, and why are you dividing? Because Naira has more value. Naira has more value. So it's going to be 7,000 divided by 5.4. Now, the third additional information says that in the year ended September 30, 2020, Buga bought wheat from Kumasi for 5,880. Buga paid for the wheat on delivery, and there was no debt owing to Kumasi at the end. Okay, so this first sentence is telling us that as at September 30, 2020, which year are we now? We are in September 30, 2023. So that's around 3 years ago. In 2020, Buga bought wheat from Kumasi for 5,880. Okay, so the parent bought wheat from the subsidiary. And he paid for the wheat on delivery, and there was no debt owing to Kumasi at the end. Okay. Then I said, as at September 30, 2023, which is the year end, Buga PLC inventories include 360 million of wheat bought from Kumasi, and Kumasi charges markup of 30% on cost of sales. Okay. I mean, let's have a brief discussion on this. So anyone that has solved this question before, how did you treat it? Can anyone just, or even if you have not solved it, it doesn't matter. So what adjustment do we need to make here? What should we do in this note 3? Very fast. Anyone?
Unrealized profit, sir.
Unrealized profit. Okay. Okay. Any other person? Okay, so I'm seeing two things here. The first I'm seeing here is the fact that there was an intragroup transactions. There was an intragroup transaction between the parent and the subsidiary of goods worth 5,880. And when you have intragroup transactions, it means that they need to be cancelled out. The sales in the books of the seller and also the purchases in the books of the buyer should be cancelled out. And any unrealized profits will be added to the cost of sales. I mean, since they asked us to prepare P&L, so I'm focused on that. So the sales and cost of sales, this intragroup sales should be cancelled out. That's how intragroup sales are treated. And if there were any unrealized profits, and like in this case, there is, because in the books of Kumasi, in the books of Buga, it was Buga that purchased, right? So the inventory will be sitting in his books. In the inventory of Buga, as at the year end, there's still 360 million worth of unsold goods. And these were calculated at cost plus markup. So we can usually use that to determine the unrealized profit. The unrealized profit is usually computed on the unsold goods. So, and that will also be eliminated from the inventory and also added back to cost of sales. I mean, that basically should be all the adjustment, but there is one more adjustment, which I will get to before I get to that. I need to mention something. In this case, you cannot cancel out the sales and the cost of sales. This intragroup sales of 5880, you cannot cancel it out because it is not intragroup sales. And do you know why? The reason is because these sales occurred at September 30, 2020. When did Buga acquire Kumasi? 2022. And these sales occurred in 2020. So you need to, I mean, a lot of people will miss that. A lot of people will miss that. As at that date, transaction between them cannot be regarded as intragroup. No, it's not. So the only time where you will need to make an adjustment is if the inventory arising from that transaction between the two of them is still in the books of the buyer as at the date of consolidation. If it is still in the book of the buyer as at the date of the consolidation, in that case, you then would need to cancel out any unrealized profit. Like in this case now, as at the end of this year, Buga still had 360 million worth of goods in its inventory. So that has to be cancelled out. The unrealized profit on that needs to be cancelled out. But you see the sales, these 5880 sales and purchases, you're not going to touch it. There's nothing you're going to do with it. If you cancel, it's a trap for you. That's one. Secondly is that there is also a deferred tax implication here. There's a deferred tax implication here. Since ordinarily I will have ignored deferred taxes, I will have really ignored, but the examiner specifically mentioned that deferred taxes are not recognized under Ghana GAAP. So that means every transaction where there are temporary differences, you need to complete the deferred tax, whether they tell you or not. In this case, whenever you have unrealized profits, like we are going to compute here now, in the group accounts, you will cancel it out. You will not recognize it. You will cancel it out. So it shows as if the profit does not exist. But the reality is that for tax purposes, there is nothing, I mean, taxes is at individual entity level. So in the books of Buga that made these profits, the taxman will tax this profit this year because it's a profit. You have made money. So is a profit that will be taxed. But you in your books, you are saying is unrealized. In the consolidated account, is unrealized. So you would not recognize that profit at all. But tax is being paid. The taxman will ensure you pay. So there is a temporary difference there in the sense that it's captured for tax purposes, it's not captured in your books for accounting purposes because it's cancelled out. So since you are paying the tax now, which goes to show that In the future, when you eventually recognize that profit, which is when the good is now sold out to outsider and this profit is realized, you will not pay tax again and you will have it in your books as income. So there will be a reduction in tax for you in the future. And that's what we call deductible temporary difference. So there is a deferred tax asset here that we need to recognize. So all you need to do here are two things. Number one is for you to compute the unrealized profit. And number two, the deferred tax on the unrealized profit. And it's usually deferred tax asset. Any questions?
So sir, just to clarify, this additional information too, if in the case where Buga did not have any, it did not have any sale, any of the sale remaining in its inventory, we'll cancel it. Like we wouldn't cancel it, I will just leave it the way it is.
Exactly, that's what I'm saying.
Okay. But so you're saying that in this
You will
case
not touch.
now,
Even
when we
now,
are completing
even now,
our
sir.
statement of profit or loss, we will not minus, the for the revenue is parent plus subsidiary minus intergroup sales. We will not minus the intergroup sales. But
Yeah.
when computing the cost of sales, we will add
Yes.
the unrealized profits.
Yes, because the good is still in inventory as at the end. That's
Okay.
the only reason.
Thank you.
Yeah.
That it doesn't matter who sold to whom.
So let's quickly compute that.
Sir,
Yeah. Yeah, me too.
it doesn't matter that it's a subsidiary that sold to the parent.
It doesn't matter.
Okay, thank you.
Hello, can you hear me? Okay.
Yes,
Okay, good. Okay, so let's quickly solve that. That's solution workings 2. The intragroup sales. So let me just put a note that the intragroup sales will not be cancelled from the sales and purchases and the sales and cost of sales because the transaction took place or occurred before the date of acquisition. So they were not a group then. So they were not a group. So then, okay. However, since the inventory is still in the books of Buga at the end, the profits elements of the inventory must be cancelled out. It has to be cancelled out on consolidation. Because that then becomes unrealized profit. It needs to be cancelled out. It will be cancelled out. So in this case, the unrealized profits, since they said is cost plus markup. So we need to convert that markup to margin because that 360 million is like the selling price. So we'll do 30 over 130 times 360 million. And how much is that? How much?
83 million.
Sorry?
83 million.
Did you approximate, or is it 83 point something?
83.0769.
Okay, let's just do, if there are decimal places, let's just agree to do everything to one decimal place. So is either you want to do everything as whole number, you want to do it to decimal place. So that will be consistent across board. So additionally, we'll have these unrealized profits. Told you is a taxable temporary. Is it a taxable? Deductible. Temporary difference. And my thinking, the way I thought of it is just the same way I taught you when I taught you guys income tax, is the fact that the tax man will tax, he will pay tax on this. Okay, even though it was eliminated in our book, we are not recognizing it because for accounting purposes, it's unrealized. We eliminate it. Okay, but for tax purposes, it's taxed. You have sold, you have made profits in the individual entities account, so it's taxed. But when we're going to recognize it, because when it becomes realized, then it's profits. At that point, we won't pay tax anymore. So it's like a deductible temporary difference here. And deductible temporary difference will lead to a deferred tax asset. So what's the tax rate? I saw tax rate of this guy. Who is even making this profit self? I think he's in the books of Buga. Yeah, it's in the book of Buga. So what's the tax rate? The tax rate for Buga and Kumasi is 20%. Okay, so they use 20% here. So let's use 20% for tax rates. So 20% times 83.1. How much is that?
16.6.
So now for me, since the question just asks us for P&L, so I'm just focused more on P&L. So this unrealized profit now, ordinarily I'm supposed to add it to cost of sales and also deduct from inventory, but I'm only doing P&L, so only this one is relevant. Additionally, these deferred tax assets, it should be deducted because it's an income deducted from your income tax expense, if any, and it should be a deferred tax asset in the statement of financial position, but it's not really relevant because I'm not preparing statement of financial position. I'll just remember to treat it as a deferred tax income in my statement of profit or loss. Okay, and that's the end of this additional information. That's the end of this additional information. So can we move to the next additional information? Okay, we'll
Sir,
take
please
that as a
hold on.
yes. Okay, I'm back there, Chimamaka.
So, sir, you're deducting the deferred tax assets from your income tax expense. Okay, that's for profit or loss, right?
Yes.
Okay, so done.
Can I continue?
Yes, you can.
Okay. So the number 4, it says Buga PLC other operating income comprise a management charge to Kumasi Limited of 1506 for management support given to Kumasi. This charge was paid by Kumasi on September 30, 2023 and is included in Kumasi's operating expenses in future years. There will be no management charges as it is expected that Kumasi Limited will not require Buga's management support. So this is an intra-group transaction that will be eliminated. We're not going to consolidate it. It will be eliminated when we want to consolidate. Okay, so Buga already put it in his operating income, while Kumasi has it in his operating expense. Okay, so that's management charge, and so the management charge will be cancelled out in the consolidated statement of profit or loss. So when we are consolidating, we will cancel it out from the two of them. It's an intra-group transactions. So they already have it present in their books right now. So all you just need to do is just need to cancel them out when we are consolidating. And that's all for that. The next one is, this is Kumasi Limited has a 2 million. Yeah, Pelumi, go ahead with your question.
Okay, maybe I'm too fast, but in all this, why are we not calculating the exchange rate? Like this 105,156 million. Now, I thought we would need to calculate the appropriate rates at which we record it in our books and see if there's a, I don't know, maybe loss or gain or something.
Okay, we can do it now, but you know that since it's already in the books of Buga, is 1314.
Oh,
You will
okay. So we
see
are sure
is
that
in
the examiner is not wanting us to also confirm if it was recorded at the appropriate exchange rate.
well, you know that this is a P&L item, so and it is left to you to, you are not confirming whether it's recognized appropriate exchange rate. So as far as this one is concerned, it's you that will determine which exchange rate is appropriate. And you know that P&L items are translated at average rate for a foreign operation. So all P&L items are translated. So for P&L items, there won't be any exchange difference or whatever. It's translated at average rate. So we want to test it because I know we want to test it. So we can just do, it was 1506 divided by, what's the average rate? What's the average rate here?
Average rate is 4.8.
Okay, 4.8. So how much is that giving us in Naira?
0.75.
Okay,
So
we
why do you
agree.
get Sorry, why did I give us the other? Because okay, I think I'm mistaking both for each other because okay, the one we've done is you check the date of the transaction, the date of the reporting, and then the closing rate. I think that was what I was having in mind, but I realized that this is different.
Okay, so let me. Okay, no. See, for foreign operations, all you need to do is to translate their account and balances at certain rates. All balance sheet items are translated at closing rates. All P&L items are translated at average rates. Share capital and pre-acquisition reserve are translated at historical rate. You see, the one you have learned are foreign currency transactions. And in those cases, when you have monetary items, so you separate monetary from non-monetary. So monetary items are usually translated at closing rate. And you usually determine at the end of the year whether you're having a foreign exchange gain or a loss, an exchange gain or a loss on each of those transactions. And the same thing can happen here too. If there are transactions during the year where we have monetary items, and monetary items are things like receivables and payables or investments. So those are monetary. They are usually translated at closing rates in all cases. So I think there is one like that we're also going to. So it's not so much different. So those ones you learned, nobody will talk about P&L items there. It's going to be the balances at the end of the year, whether you have a receivables or a payables that is still in your
Okay.
books at the end of the year. That's where you can have a foreign exchange gains or loss in those ones.
Okay, sir. That part you said SOPL is average, one is zero. Can you please come again? I want to take that note, please.
I said statement of SOFP items, statement of financial. In fact, all assets and liabilities are translated at closing rates.
Closing rate, okay.
Yes. P&L items, meaning income and expenses, are translated at average rates.
Okay, sir.
While share capital and pre-acquisition reserve are translated at historical rate.
Thank you so much.
All right.
Historical rate meaning the date at which it was done, Abby?
The date of acquisition.
Of acquisition. Okay.
Yeah. Okay. So based on your question, you will see that the operating income in Buga's book is 314. So basically what is inside is just that management income that he earned, which is similar to what we just computed here. This 314. Well, since we chose to do one decimal place, that's why. So all we are doing with this is just to cancel it out. So there's no big deal around this one. Okay. Any other question? Or should I move to the next additional information?
Yes, please.
Okay. So what's the next one? Okay, 5. It says Kumasi has a 2000 taxable trading loss arising in the year ended September 30, 2023. Ghana tax laws allow tax trading losses to be carried forward only against future taxable trading profits. Kumasi Limited is expected to make a taxable trading profits next year. Kumasi Limited accountant has suggested that the Ghana Tax Authority could investigate the 1506 management charge billed by Buga to Kumasi and challenge the recovery of Kumasi's tax losses. The tax rate of Buga and Kumasi is 20%. So what's happening here in this case now? So what we have is a situation whereby we have taxable trading loss of 2,000. And this is in the books of Buga. And we're told that the Ghana tax laws allow tax trading laws to be carried forward against future taxable trading profits. And the guy is expected to make a trading profit next year, so you can really carry it forward then. But the accountant has said that the tax authority is not going to allow this 1506 management charge. That's from workings from notes from the earlier notes, note 4. That the tax authority would investigate this amount that we built to Guba, that we built to Buga, that Kumasi will have recognized as expense. And the tax authority will challenge the recovery of our tax laws on that basis. So what's happening here? What do we need to do here? What's the major item here? What are we doing here? What's all this information for?
So what I think is that the 150 is that Kumasi has paid to Buga. They recognize it as an expense, right? Which reduced their profits, made a loss. And now they're saying that the tax authority might not allow it as an expense. So we have to deduct it from their profits. Like,
Okay.
Does that mean that the loss they'll be able to recover will be less? That's what it means, right?
Exactly. That's what it means.
yeah, it's yeah.
That's what it means. That's what it means simply. Okay. So that means they won't be able to recover 2,000. They will be able to recover 2,000 minus 1,500 because the taxman will not allow this. You will add it back. So minus this. So even at that, so what's the impact of that in the scheme of everything we are doing here? What's the relevance of that?
Another temporary difference, sorry.
Thank you very much. Thank you very much. Who is this talking? Is this what's your name that we know?
Chimamaka.
I don't know you. This first time I'm hearing your voice. So.
This is a lie. I'm not your friend that is always sleeping.
I didn't even know your name. Imagine. Nice one. So there's a taxable trading loss of 2 million. I always want to put this. It's very important in the exam. You don't want to joke with it. This currency, in this case, the Ghanaian's currency. Then the management charge, $1,506. So what's the difference?
$494.
Okay, so this is the temporary difference that we can claim, and is a deductible. Since the law says, okay, you can carry it forward. So that's a deductible temporary difference. And deductible temporary difference will result in a deferred tax assets, which is going to be 20% times 494. How much is that?
98.8.
98.8. Okay. 98.8. So we have this. In Ghana cedi. So of course we'll translate it later, Sha. Any other one? That's all for these additional notes. So we can move to the next one. We are done with this. So let's move to 6. So it says in October 2022, Kumasi Limited set up a defined contribution scheme for its directors and has accrued a contribution of 1132 million for the year ended September 30, 2023. This contribution was paid to the pension fund on October 15, 2023. Under Ghana GAAP, pension contributions are recognized directly in reserves through OCI. Tax relief for pension contribution is claimed in the accounting year in which the cash is paid to the pension company. Okay, so what are we doing here? So I can see that at the beginning of the year, because that's October 2022, the guys set up a defined contribution scheme. So don't miss out this defined contribution because there's defined contribution, there's defined benefits. The way IAS 19 treats the two are different. Defined contribution, that one is straightforward. The pension you are paying, debit P&L, a credit liability, if you have paid it, if you have not paid and all that. So it's very straightforward. But if it was a defined benefits, that means that amount is something, it's that contribution you will have been contributed to a plan asset because you're managing it in-house yourself. And they will give you current service costs and all of that. So in this case, it's quite straightforward. So what I need to deal with is other contribution. And now this is the Ghana company. They made a contribution of 1132 Ghana cedis for the year ended 2023. So the thing is that they paid it in October. Okay, the contribution was paid in October. So that means they didn't pay it this year. They pay it after the year end. So which means that they will have accrued for, they have it. I mean, that's what they say, they have an accrued contribution. Now, under Ghana GAAP, pension contribution are recognized in reserve through OCI. Okay. So which means that, let me confirm that they actually recognize it to OCI. Oh, okay, good. So if you look at the second to the last item in these statements, these guys recognize this pension in OCI. They recognize it to OCI. And I'm sure the other leg will be in reserves. Yes, if you look under equity, the last item under equity, there was a pension reserve of 1132. Okay, fantastic. Okay. Now, that being the case now, so we have some corrections to make then because that is not the way it's done in IFRS. So we need to correct that. So very straightforward. It's like you need to take it out from OCI and go and put it in P&L. So I will just add it to my maybe the admin or operating expense, depending on the classification or the name they call that expense in their books. That's all I need to do here. So we do not put it as OCI under IFRS, or specifically IAS 19 is an expense. So we just expense it like that. That's one that we need to do. And secondly, now they are talking about taxes. They say tax relief for pension contribution is claimed in the accounting year in which the cash is paid to the pension company. Who can tell me what's happening here? What's happening here? Because you need to consider deferred tax here. There is a temporary difference because if you recognize this 1132, the tax man will disallow it. He will not allow it. He will say, have you paid it? You will say no. He will not allow it. He will say, when you pay it, come. And that's what this guy is telling us here. So there's a temporary difference that will be deducted, meaning you have a deduction in the future. This year we are not deducting, but you will have a deduction in the future. So even though the tax man is not allowing it now, we need to accrue for that tax. Now, okay, we'll get a deduction. So there is also a deductible temporary difference in this regard that needs to be recognized on this pension. And that's all that needs to be done here. That's all that needs to be done. So let's do it. That's note 6, note 5. So I'm going to classify. Shimamaka, you want to say something? Go ahead, please.
Sorry, so I had a question, but it was about the last working, the number 4.
Yeah, ask it now.
So this 494, they said that they will be able to relieve the loss against the next year's profit, right?
Yes.
So we are going to relieve 494 against next year's profit in the eyes of the tax authorities. Is that what they're saying?
Yes.
But in your actual books, is it 2000 that you relieve?
So you know that what is happening now is in my actual book, I'm making a loss. I have a loss in my I have an accumulated loss right now sitting, which I can claim as a deduction from my future profit. So there is a loss that I can claim in future. So in the future, this loss I'm having will make me have a tax benefit. Okay, so that's what we call deductible temporary difference. So I will have a deduction in the future. So an item that I have in my books now that will give me a deduction in the future is a deductible temporary difference. But we are now saying out of these 2000, 1506, we won't allow it. So what you can have as deduction is just 494. So we are saying the tax deduction you will get in the future is 98.8.
Okay, so they will charge you 20% of your deduction.
Yes.
Would they now add this 19.8 to the rest of your tax? Or
They will
that would just
just it will just be a deduction. It would reduce your tax.
okay, the 98.8 will reduce your tax.
Yes.
Okay.
That's a tax deduction you will get.
Okay, thank you.
Yeah. So you will classify the pension contribution from OCI to operating expense. Okay. Compliance with IAS 19 on pension. So that's all we need to do. And how much was the pension contribution? How much was it again? 150 what? 1132. 1132. And also we have a deductible temporary difference here. There is a deductible temporary difference because the tax authority does not allow an expense. In fact, the tax authority only allow expenses as deduction on a cash basis. So it's only when you have paid it that you can claim tax deduction. So you are not going to have the deduction now, but you can get it in the future. Okay. So in this case, the deductible temporary difference is that pension amount, temporary difference, is that 1132. So the deferred tax assets is 20% of that. And how much is that?
$226.4.
226.4. Okay. And that's all for this additional information. So in all of this, I know that, the double entry for deferred tax asset, one leg is going to P&L on the credit as a deferred tax income, the other leg to non-current asset in my summary of financial position. Since this question only requires for P&L, so I know that I only need the P&L leg. So no issues. So can I move to the next workings? Okay, take that as a yes. We're almost done. It says on April 1st, 2023, Buga PLC made an additional investment in Kumasi when it provided a loan of 3.2 to Kumasi Limited with interest payable at 5.25% per annum in arrears. Buga PLC does not require repayment of this loan in the near future. No adjustments have been made for this loan other than to include it in Buga PLC non-current assets. At the rate of exchange at April 1st, 2023, Kumasi Limited has recognized the loan in non-current assets. No entries have been made in either company in respect of the interest on loan. Interest is taxed on an accrual basis. Okay. What are we doing here? Chimamaka, what do you think? Okay, Pelumi, go ahead.
You eliminate intergroup loans upon consolidation.
That's correct. Any other thing?
Deferred tax.
What deferred tax? Chidima, which deferred tax? Yes. Which deferred tax is here?
But then, if it says that Buga PLC does not require repayment of this loan, can we actually call it a loan, or we just as an additional investment that they will maybe just to add it to equity or something?
That's correct. So ordinarily, it should not even be a loan since it does not require repayment. So, but the fact that they pay interest on it, then that still make it a loan. The fact that interest is paid is still a financial liability because that means there is still an obligation to deliver cash in form of that interest. So, and again, I don't even want to bother myself so much about the amount itself, because I'm not preparing statement of financial position. I'm preparing P&L. Okay, so with that in mind, I'm just focused more on what adjustment do I need in my P&L from here. So it's not really about the value anymore. So the first thing is this, the interests, because they told me that no adjustment has been made. No entries has been made in respect of interest. So I need to recognize this interest. That's one. I need to recognize it in the book, though it will be cancelled out on consolidation, but at least I need to show it in the individual account of the subsidiary. Secondly, is the fact that these investments in the books of Kumasi, in the book of Buga, he has recognized it. If you look at this, they said Buga does not require repayment. Then I said no adjustments have been made for this loan other than to include it. So Buga has included it in his books at the rate of exchange in April when he made the investment. So we recognize it in April. So it's an investment, really. So, okay. What I wasn't talking about is even out of context. Okay, so the main point is that he recognized it in his book, and the exchange rate he used would be the exchange rate in April, which is 4.4. So, but now, at the end, the exchange rate will now be different. If he's translating the exchange rate will be different because this is a monetary item. This 3,200 is a monetary item. It's an investment. So at the year end, you will need to remeasure. You will need to get the updated value, just like Pelumi, you said, it taught you in class, right? This is something like that. Now, so at the year end, the exchange rate, which is September 30, 2023, is now 4.2. So it then becomes different. It will change. So there will be a foreign exchange gain or loss in this case. Let me show you. So investments or additional investments in Kumasi. Yeah. Since I'm looking at it in the bookshop. So at 1st April, that's 3.2 Ghana cedis. It was in his book at 4.4. So how much is this? Can you help me?
727.3.
Let me just confirm. That's what he has in the summary of financial position. Okay, good. Amount owed by Kumasi, but he has some to it, so he approximated, no problem. You're fine. But at the year end, which is 30th September, value will change. It's now 4.2. So how much is that?
Um, 761.9.
Okay, what's the difference?
$34.6.
Is this an exchange gain or an exchange loss?
Loss. No, gain.
Hmm.
Gain. It's gain. Sorry.
Why is it gain?
So you're supposed to have, you have an investment of 727 before, and by the time you revalued it, or like recalculate it, you now have 761.
So the value of investment has gone up.
Yes.
Okay. So foreign exchange gain. So where does it go? P&L or OCI? P&L or OCI?
Yeah.
Okay, correct. Which of the gains goes to OCI? Anybody? Which foreign exchange gain goes to OCI? Ayobami, what do you think? Okay, Sharafa is here. Sharafa, go ahead.
It's for the investment that are held for a short time
Sharafa, I can't hear you. Your line is your network is not good.
Yes, I said
Select another.
can you hear me now?
Yeah, it's better now.
Yeah, I said it's for investment that are held for short time or for sale,
No.
not for long
No.
term.
Can I try?
No. Yes.
Let me see all these unrealized gain and losses.
I'm talking about foreign exchange gain that goes to OCI. So
Is
we
it
had a
gain
foreign exchange gain. Go ahead, please.
is it gain on what's it called? Fair value measurement of an asset or stuff like that. Evaluation.
No. No. It's only just one. Is the foreign exchange difference on translating the statement of financial position of a foreign operation. So those of you in VI might not know this, but when you translate the statement of financial position of a foreign or the net assets of a foreign operation, you usually compute a foreign exchange, an exchange difference. So that exchange difference goes to OCI. That's the one that goes to OCI. But you see, on monetary items, on all of these, the foreign exchange gain goes to P&L. But on translating the books and balances, the statement of financial position of a foreign operation, it goes to OCI.
Okay, so do
So
you
this
mean
one now,
that, for example, let's say our subsidiary in Ghana, let's say we are looking at their PPE now. Their PPE is so amount. Like that means translate it into ours and it's higher.
no. It's not PPE.
I thought it's
I'm
about like
talking
asset
about,
and liability.
yes. So you see, when you translate the entire accounts, not a single item. So at the end of the year, you're supposed to translate the statement of when the guy prepares his account in his own currency, whatever he has done, you then translate a statement of financial position to your own currency, right? There are always differences arising from using different exchange rates from year to year. That's exchange difference on translating a foreign operation. It's different from translating individual transactions. Like in this case now, this is just a parent doing a spot transaction, buying an investment in Kumasi. You translated it, you get a gain.
Oh,
This one is doing, I'm talking about when you translate the books and balances, there are always exchange difference that you would always determine. So at every point in time, when you translate the financial position of a foreign subsidiary, you would compute an exchange difference because there would be an exchange difference because you are using different exchange rates year on year, and
okay.
it
So
has
this,
an impact.
okay, let me let you finish.
Go ahead, please.
So this difference you're talking about is like here or here. So let's say, for example, last year we are using dollar to naira at let's say 400, and this year is now 11750. So it is like year on year. So we'll see. I mean, obviously this year would have a whole lot of difference. So it is the increase that will go to OCI for this year. And then let's say the
Okay.
following year, dollar it has now dropped back to like let's say 1.4, it will be minus.
Something like that.
Okay. Thank you.
That's the only one that goes to OCI. But on foreign currency transactions, all the other ones goes to POL. So in addition to this, just for the purpose of the books of Kumasi, so the interest on loan paid by Kumasi, we're told is 5.275%, 5.25% times 3,200. They say it hasn't been recognized at all. So how much is it?
$168.
168. But you know that they issued the loan during the year. This loan was issued during the year. They issued the loan in April, or he invested in April, yeah. So Kumasi will not pay interest of 1 year. That will be how many months? April, May, June, July,
6
August.
months.
That's 6 months interest. That's half of that. 84. That's 84. 84 Ghana cedis that we're going to show in the books of Kumasi. So that we'll translate it, so that we'll cancel it out. And that's it for this. They told us that interest is tax. If you see the last sentence there, they say interest is tax on accrual basis. So that means, and they have not paid, they have not even paid, which is fine. So there's no temporary difference. There's no temporary difference here because the taxman is going to consider it. If they had said that interest is taxed on cash basis, I would have computed a deductible temporary difference that will give rise to a deferred tax asset. Are you following? Is Beatrice in this class? Where is Fashiyito? Beatrice, are you following? You have not said anything today. It's unlike you.
Sorry, sir.
Yes, I'm in the class. I'm in the class.
Sorry, I'm trying to wrap my head around the
Okay.
conversation about cash basis and deferred tax assets, right? So what are those things that, that has to do with cash that, should now make us know that we are meant to do some calculations around deferred tax? I'm trying to understand.
So to just summarize it for you, right? I think I taught you guys deferred tax. I can't remember whether that was the one or Mr. Ibrahim. So I will have emphasized the fact that whenever the taxman does not consider an item in your books for tax, an item that we recognize in our books, they didn't consider it, but they will consider it in a future period. That's a temporary difference. That's a temporary difference. So since in accounting, we recognize items on an accrual basis, whether we have paid it or not, like that pension contribution that Kumasi recognized anyways, even though he hasn't paid it, even though he's going to pay it next year. The taxman will not consider. If you look at the last sentence, they say tax relief of pension contribution is claimed in accounting in which cash is paid. So is taxed, it will allow us tax relief on cash basis. Meaning when you pay it, when the taxman sees in our book, he will say, what's this pension? Have you paid it? No. I'm not going to allow it. When you pay it, I will allow it as a relief. That means that this year, that item, I'm not going to have it as a relief. That item, it will not constitute part of my income tax. And accounting does not want that. So we need to accrue for that tax. I mean, that's deferred tax. We call that deductible temporary difference. There's a temporary difference that will make me have a deduction in the future, resulting in a deferred tax asset. So the cash basis and all that I'm mentioning is just the fact that if it happens like that the taxman will not allow an item in our books simply because we have not paid for it. That's a temporary difference. That's the temporary. I don't know if that help you a bit, but there are more stories to these things. You can watch my video on income tax. It helps you.
Sorry, Tapiz, I have a question.
Yeah, go ahead.
Can you explain that statement that the taxman will not allow something in the books because you haven't paid for it?
Okay. So it's just like saying that, when you want to compute your CIT as a company, okay, and you would go to the taxman and say that, okay, well, I made a revenue of 100 million, and out of this my revenue, I incurred these expenses, electricity expense, salaries and wages, rent, and all of that. And this is my profit, okay, and my profit is now reduced to 100 naira, and I'm supposed to pay 30% of that as tax, okay? So the taxman will then look at, okay, he looks at all these expenses and say, okay, this one, is it a legitimate expense? Is it exclusively and necessarily incurred? You look at it. If you provide him all the evidences, then you will say, okay, you can allow it as deduction. You can truly deduct it from your revenue. You can truly deduct it. There are some that taxman will say, no, where is the evidence? You cannot deduct this. So when I say allow it as a deduction, it's just for the taxman to compute his own taxable profit that you eventually pay taxes on, right? So which is what is done in real life like that. So I don't know if that makes it clearer for you.
It does. Thank you.
You're welcome. So can I move to the next one, which is the last additional information? So this one says, yeah, go ahead, please. You can ask your question if you have one.
No, I already responded. So can you move to the next one? I said yes, please.
Please,
Okay,
please,
good.
I have question. I have question, sir.
Okay, all right.
Please, unlike the scenario you just explained, so that the one that the taxman will not allow, is that not the one
Okay.
to support to result to taxable temporary differences?
It now depends, okay? It now depends. If they don't allow it now, but they will allow it in the future when you are able to show evidence or when you eventually pay for it, then that's what we call temporary difference. Then that will have deferred tax implication. You need to accrue for that tax now.
You know, when we have temporary differences, we now know that it's deductible or taxable. I'm talking of it. Is it not that one? Would that one not result to taxable temporary differences?
That's not how you determine it. So the way you think about it is the fact that these differences, if the situation is such that they will allow an expense as deduction in the future, that's a deductible temporary difference automatically.
Okay.
If the situation is such that they will tax an item in the future, something that they're supposed to tax now, they are not taxing it now, but they will tax it in the future. That one is a taxable temporary difference. That's how you think through it.
Okay.
Yeah.
Okay. Thank you.
Hello, sir. Good afternoon.
Yeah,
This
good afternoon.
interest part of the number 7, I'm a bit confused about that. With that.
Yeah, you should not. You should not, because of the fact that they told us that neither of the companies has recognized interests on loan in their books. If you look at the last sentence, they said no entries have been made in either company in respect of interest. And all we just did was to calculate the amount of interest, so that when we are translating the statement of profit or loss of Kumasi, we can put it there. Because he hasn't recognized it, and he needs to recognize it. That's just the idea. Okay. The last additional information, it says at the beginning of the year, which is at October 1st, 2022, there was no differences between the fair value of Kumasi limited net assets and carrying amounts, except for the valuation of land owned by Kumasi Limited. PPE including land at cost of 3,120, which had a fair value at October 1st, 2022 of 4,640. The directors do not intend to sell the land. Ghana GAAP does not allow revaluations. Okay, so in this case now, there is the normal fair value adjustments. Now that's all we have here. Fair value adjustment is what's happening here. So at the date of acquisition, which is the beginning of the year, so they are saying there's a fair value adjustment that we'll consider it when determining our goodwill. So we're told that Ghana GAAP does not allow evaluations. So we just need to compute the revaluation. So let's do that.
I'm so sorry, sir, but when they say Ghana GAAP does not allow revaluation, doesn't that mean that we shouldn't be revaluing?
In fact, you know that Kumasi is our foreign subsidiary that we need to consolidate.
Yes.
So yeah, and part of the major thing we are doing in this question is anything that is not in compliance with IFRS, we need to do it. So yes, Ghana GAAP does not allow fair value adjustments, but IFRS allows it, so you need to do it.
Okay. Okay. Thank
Yeah. So the cost was how much, and the fair value is how much. So we'll have a fair value surplus. How much was the cost? 3,120 for 640. What was the difference? How much?
1,520.
Okay. 1,520. So we'll consider this when we are computing our goodwill. When we are computing our goodwill. So this will have, let me see, relate, since we are going to cancel it out. Since it's be cancelled out on consolidation, because this is a pre-acquisition reserve. So as far as the taxman is concerned, so this is what they will carry in our books. So in his individual account is there as a surplus. So what I'm thinking about is, let me just bring you to the loop, is that I'm considering deferred tax implication here because ordinarily there should be a taxable temporary difference here. When we have a evaluation surplus and all that, the taxman will disallow it until you have paid for it, until you have actually sold the asset. So the taxman will not tax it. So when you eventually sold it, when you make a gain, then it comes in and it tax it. Then you will be having a deferred tax liabilities because it will be a taxable temporary difference. So that's what I'm considering now. So, but for the fact that this fair value surplus here is a pre-acquisition reserve, it will be cancelled out on consolidation. So I'm saying will it even ever sees it? But however, in the separate account of the parent of the subsidiary is there in the separate account of the subsidiary of this Kumasi. It will recognize this surplus there. It will recognize it. So it's something we need to recognize.
So
So,
are they going to recognize it? I thought they said that the gap does not allow revaluations. So it's just going to be the cost of 3,120 that they'll keep recognizing.
but you know that before we consolidate them,
Yes.
we would make the adjustments in their books. That's why I'm
Oh,
even completing it here. This adjustment is going to be made in their books. I will debit their OCI and I will credit OCI and debit their asset.
assets. Okay.
So then the question is, since this guy didn't even talk about, so I won't consider it. And the reason is that they didn't tell me how it's treated in Ghana for tax purposes, whether there's tax, whatever. The one they really want me to treat the tax, they actually mention that the taxman will not allow it, will allow it, it's cash basis. Since they are silent, so I would rather be silent myself also. Okay, I'd rather be silent here as well. So, yeah, that. Is there any other thing that we need to do here? Is there a possibility for an exchange gain here? Chimamaka, are you still there?
Yes.
Are you sleeping already?
No, of course.
So is there a possibility for an exchange gain here? So what I'm looking at is this.
Do
Um,
you mean
yeah, I'm with you.
between date of acquisition and date of consolidation?
Correct.
Then I guess there will be a difference.
Because at the date of acquisition, this figure in Naira will be translated at the opening rate, but because he would have that land in his books, by the time at the end, it's not going to be, when we are consolidating it, we'll be consolidating at a very different amount using a different exchange rate, which is a closing rate also. So there'll be difference between the value at the date of acquisition and at the date of. So what I'm just looking at is, in this case now, did it really translate at the date of acquisition that we are now saying we are making again? The guy is in Ghana, is his asset. If it was the parents that bought an asset in Ghana now, that bought an asset in Ghana, or that has a payables or thereabout, then that's where I can be considering changes in value. So when it comes to a non-monetary asset like this, so non-monetary asset, usually you might not be able to compute such. So let's just do our surplus and leave it. So, and that's the end of all of this. That's the end of all of this. So the only key thing that I need to do is just for me to translate all of this to Naira. So which is a major step. So translation of statement of profit or loss of Kumasi. Give me the Ghana cedis, the rates, and the Naira equivalents. Okay, so where's the revenue? What's the revenue of, do you have the question? Anyway, let me just be going back and forth. The revenue of Kumasi was 9892. Mm, 9892. What was the cost of sales? Cost of sales is 7084. What's the difference? The gross profit?
2808.
And what's the next item?
Other operating income. Nothing for Kumasi.
No. So let me not put it. Since I'm considering Kumasi, I want to translate the books of Kumasi. So what's the next item?
Profit or loss before taxation.
No, I have operating expense.
Operating
Okay,
expense.
sorry, other operating expense. Sorry, other operating expense.
3776. Operating expenses. 3776. And there was this pension contribution that I said I'm moving to operating expense. How much was it again in our workings? 1132. 1132. And then this gives me how much? This would be my profits from operation. How much is this?
1,100.
So they put it as profit before tax in the book.
Yeah, but me, I will still compute interest. So it's after my interest, I'll have profit before tax. So what do you have?
2,100 minus 2,100.
That's low.
That's loss.
Yeah.
So that interest payable, that finance costs, I think we got it as 84.
Yes.
Where is it again? This one. This 84 in Ghana cedis. 84. So what's the PBT?
Bracket 2,184.
How about the income tax? So I need to cumulate it because I computed a lot of tax because in the P&L, there was no tax there. You see that there was no income tax there. It was 0 for Kumasi. So, and we have computed series of deferred taxes, starting from this, but this is Naira. This is Naira. So this deferred tax relates to who now? So this is not, I won't touch this because this is in the books of Buga. So I won't touch this Buga's tax. It has nothing to do with Kumasi. So the tax that I need, this 98.8, this in the books of Kumasi, 98.8, and this 226.4 on the pension contribution. So 98.8 and 226.4. So how much is that? 98.8 plus 2.
325. 325.
That's 325. So
0.2.
point what? 0.2. So since it's a deferred tax income, because it's a deferred tax asset that we had, so it will be an addition. It should not be a deduction because it wasn't a charge, it was an income. So what's my profit for the year?
Hmm.
Hmm?
1,857.8.
Okay, so the loss. It was a loss. Okay, now I then need to translate all of this using the average rate. And what's my average rate? It's 4.8.
4.8.
My average is 4.8. So this 4.8, this 4.8, this 4.8, this 4.8, this 4.8, this 4.8. Okay, so let's do it. Let's start with the revenue. 9892 divided by 4.8. What do we have?
2060.8.
2060. 2060.8 0.8. So that's like 2061. So let me approximate the final figure. This is what I want to consolidate eventually. How about this?
1610.
1610. So what's my gross profit?
451. 451.
Oh, wait, 7,084.
That is 1,475.8.
1476.
1,475.8.6, yes.
Okay, so how much is this then? So what's my gross profit?
585.
Okay, how about the operating expense?
$787.
Okay, how about the pension?
$236.
Okay, how's the balancing figure?
Negative 438.
Minus 438.
Okay, but how about the interest?
17.5.
18.
How's the PBT?
456.
How's the income tax?
68.
38.
What's the profit for the year?
388. Negative.
Okay. Now that we have gotten our translated P&L, then we can prepare for, what's the name of this guy? Yeah, Beatrice, you can ask a question.
Please, what of other comprehensive income, sir? It will be translated.
You know that the pension, we have moved it to expense. The only item there was the pension.
Okay.
But this OCI, I explained that this 1132 is pension. And the way they
Okay.
treated it is wrong. It should not be in OCI, it should be in operating expense. I mentioned it in one of the notes when
So
I
that
was.
is why there's no need to translate it. Yes.
But I already translated it. This is it. I
Okay.
put it here, so I've translated it.
Okay.
Yeah. So Buga PLC consolidated statement of profit or loss and other comprehensive income for the year ended, I think it's September 2023. So what's the revenue of Buga? Is 3784. What's the revenue of Kumasi? 2061. For those of you that used to, so I try as much as possible to solve most of these questions for you. I try my best to as many as possible. In case you might want to go and check the solution, ICAN solution is wrong because they deducted the intragroup sales. That's wrong. It's very wrong because the sales occurred before. I've explained that already, anyway. So what's the addition of these two? These in millions.
5845.
5845. My cost of sales. What's cost of sales of Buga? 2480. 2480. What's the cost of sales of this 1476? So how much?
3956.
3956.
So aren't you adding the unrealized profit? Aren't you adding the unrealized profit to the cost of sales?
Yes, we have to. That was in notes what again?
Not true.
That's this 83.1. 83.1. So how much is it?
4039.
So what's my gross profits?
1805.9. 1806.
Okay. Then what's the next item? I think it's other operating income. And we know that that's majorly that management charge that will be cancelled out. So no need to stress.
Sorry, sir. Are we not going to calculate goodwill?
But do we need goodwill in P&L?
I thought in our consolidation, they said if it's a negative, if goodwill is a negative, you put it in or if it's a positive, put it in P&L.
It's not negative, don't worry. If it's negative, they will not ask it as B part of the question.
Oh, okay.
Because it's the B part of the question that you should calculate consolidated goodwill.
Oh, okay.
Yeah. Okay. So let's get operating expense. So operating expense for Buga is 700.
So we
What
have
about
other operating income for Buga.
how much is it?
314.
To be cancelled out now. That's the
Oh,
management
okay.
charge that we also computed for this guy to be cancelled out. This intragroup. So operating expense, let me see the translated operating expense. Okay. This 787 plus 236. 787 plus 236. That's for this guy. Is there any other item that is going to operating expense here? Can't see anyone. So how much is this? How much?
1723.
Then profit from operations. How much do we have?
83.
Finance cost to be 0 because this interest payable you're seeing here to be cancelled out on consolidation. It will be cancelled out on consolidation. So we are really not going to use it. And
Sir, what about that interest on loan that was paid by Kumasi?
that's what I'm saying. That's the 84. It will be cancelled out against that of it's an intragroup transaction. It was paid by Kumasi. It was received by the other guy. What's his name? The parent, Buga. So he's intragroup. So it's nil. So our profits before tax is still 83. Then our income tax for this guy is 68 for Kumasi. What about for Buga? Buga is a charge of 180. That's minus 180.
But we
However,
have some tax income for Bugatti 16.
okay, that's this one.
The tax on the URPX 16.6. I think we should net stuff.
Yeah. So that's plus, this is 17, sure. So how much is that?
265.
Is it negative?
Oh,
This is
okay.
minus.
Okay. Negative 95.
Negative 95. So what's my profit for the year?
Negative 12.
Negative 12.
Yes, sir.
Okay. There's really nothing to share. So let's determine our goodwill. Even in this one, sir, there's a loss they were making. So what's my goodwill? What's the purchase consideration? I
Sir,
think it,
we do not have the foreign exchange gain for the additional investment made in Kumasi.
that's true. That's true. And how much was it?
The foreign exchange gain was 34.6.
34.6.
So let's just say 35 to round it up.
35. So just add 35 to this one. So this is 83. That should be 118. If you add 35 to 83, that should be 118. So what do we have here? 18 plus 5 should be 23. Okay, so my purchase consideration is 7,000. My
But since we
non-controlling
now
interest.
have a profit, are we not supposed to do attributable to, since there's something to share, no matter how little?
Yes. But can NCI even share? Because NCI would have NCI. What NCI will share is just of Kumasi alone, and Kumasi now it made a loss from our translation here. So
Oh, okay. So everything goes to the parent.
yes.
Okay.
So my NCI, I cannot determine now because they were told that it's measured on proportionate share. So I need to get net asset acquired. What's the share capital of Kumasi? Share capital of Kumasi was 1,000. The pre-acquisition retained earnings was 4,810. 1,04810. And there was a fair value surplus on land that we computed. How much was it again, sir? 1,520. So what's the total net asset acquired? So what's 1,000 plus 4,810 plus 1,520?
7,330.
7,330. So this one, this guy has 20% times 7,330. So how much is that?
1,466.
466.
Yes, sir.
Okay. So how much is this? What's the addition?
8,466.
So what's my goodwill?
Sorry, sir, the non-controlling interest. Why is it 7,330 instead of the 7,000?
Instead of what?
The 7,000 that is with the purchase consideration.
Yetunde.
Sir? I thought
NCI is
it's 20%.
proportionate. So you want to do 20% of 7,000 for NCI? Really? It's on net asset acquired.
Okay, sir. Thank you. Yeah.
So what's my goodwill? 8,466 minus 7,330.
1,136.
1,136. So how much is it in Naira? To be translated at the opening rate, because this is done at 1st October 2022. So what's the rate at that date? The rate at October 1st, 2022 is 5.4. I think you guys have another course now. You'll have to go.
No.
So how much is it? So how much is it in Naira?
210.
210. But now this is the year end now in the books, because this is in the books of the parent. So this is the year end now. So there will be an exchange difference in between somewhere. Because when we're translating it, because this one is as at the date of acquisition. Now, as at September 30th, 2023, this 1136 will be translated. What's the closing rate again? September 4.2. The closing rate is 4.2. So how much is it?
$270.
So there's an exchange gain here. And it could be loss, so I just assume gain. So there's a gain here. So the last question, I want us to do foreign exchange reserves. Foreign exchange reserves. I have like two foreign exchange right now. I have foreign exchange gain on goodwill of 60. I have foreign exchange gain on the investment Buga made, additional investments. I think that was 64. I can't remember. What was it again? Yeah, this 35, yeah. And there can be foreign exchange also on net assets of the subsidiary. On net assets. Let's see if we can compute that. If we cannot compute it, we just submit and move on. Because since I didn't translate statement of financial position, it becomes a little difficult, right? So, because I won't have my closing net assets, and I need my closing net assets. I will compare it with if I had it's just I cannot because it's 6 marks. I will just leave it. Because for me which is the one is this one that goes to OCI. And the way it's done, this foreign what they did in their solution here, in the ICAN whatever is wrong. Can't fly like that. So the way it will have worked is I will have gotten my opening net assets, okay, of that foreign operation. I will have gotten his opening net assets in Naira, which I have in Naira. I have the opening net assets in Naira, which is this and this. I can translate it to Naira. So I can do that 5810 divided by 5.4. How much? Can somebody help me compute this?
1076.
1076. So I will then add my profit for the year in Naira that I got. This 388 that I got here. It was a loss in error. This will give me what I call, this is my expected closing net assets of that commercial. What would that give us?
688.
688. I will then compare this with his actual closing net asset. So if I had translated his books in error, I would have gotten my actual closing net assets of this guy. And this is not the closing, this is like opening. His opening net assets. So is I can't use this because I've made a lot of adjustments to this. So if I translated it, so I did the hard work outside of the exam when I was solving this before I came to class. It was actually the same, that I was having something like a 0. So I'll just leave it at this point and just move on with my life because just 6 marks. Cannot come and kill myself in the all. So at the end of the day, I'm having 95 as foreign exchange reserves for the B part. So this becomes your solution in the exam. If you can do this one in the exam, no, you are, if you don't get everything, probably you out of the 26, you'll be getting like 25. I mean, there's no real reason why you will not get everything. But again, you have to be very smart about whatever it is you're doing. You don't have the time you have is very limited in the exam. You want to be very sharp about it. Don't be part of the people that will see the failure file because I spent 2 hours. See, you can spend 3 hours on this question. You will just be sitting. You will not know what to do. Any additional information you don't know how to adjust, leave it now. Leave it and move to the next one. Then when you do the one you can adjust that you know, go and adjust those ones on the face of the account and prepare your account and consolidate and move on. Move to the next question so that you can attend to the ones you know. At the same time, you might not even necessarily start with this. You have to be very smart with this exam because you have done classes, you have learned a lot. You cannot now sit down and you want to die there in one question. Nope, don't do that. Spread your tentacles. Make sure you answer all your questions. I mean, there's no reason you will not pass that way. And the only thing I think that is major, that I think I'm going to take out on Tuesday, because it's sure with sustainability reporting, and I've sent the material I will use. It's just discussions, and I will tell you exactly what you need to focus on for the exam. I will tell you what you need to focus on. This one, know it for your exam. It's just sustainability reporting. There are other few things, but the major thing, what you need to be doing for me right now is past corrections. Is past corrections. And if you have the time later on, you could join that intensive class. Is what I'm solving there with them is past corrections. Started already last week Sunday. We have already started ratios. Tomorrow we're going to solve more questions on ratios and like 10 previous diets like that. And all the questions will meet along the line on EPS. We're going to take them out. Then we'll move to standards, solving all like as many questions as possible on standards. Then later group accounts, then and all that. So, which is basically what your exam is all about. Like that. Take your time, solve those past questions. Many of them. Focus on that right now. Make sure you get 50. I mean, the exam is 50. You should be able to at least do whatever you have to do. Just get it done. That will not make you fail. Don't come back and come and do this course again. If you need any help, if you need any assistance, but please now start opening your past corrections. These working notes that I used, I cannot call it summarized again because it's already 302 pages as of now. If you need a complete revision, a summarized revision, on all the courses, on all the topics. It's hands-on, summarized, because it's a note I developed while teaching. Like things I'm saying, I'm typing. It's like I call it working note. It's extremely useful, so summarized, so straight to the point, and all the solutions to all the questions I've solved are there. Is everything in one place for you. You need this type of material right now. This is not the time you want to go and pick one funny textbook. Nope, don't do that. Solve all the questions there. And the good thing is that in most questions that I do, I solve past questions. We majorly focus on past questions. So when you're looking at past questions, it makes your life easier. And the aim is that if you can do 10 diets backwards or more, at least from 2015 or 2018 to date, 10 years, if you can try 10 years backward, you would be in a good position to pass this exam, because they repeat questions. You will see similar things and all that. So we are still on. Me, in my own style, I don't say I finished class. Even if I finished all the topics, I don't finish. I will continue to revise with you. You enjoy your money till the exam. If you're available, me, I'm available. So that you won't come back and say you won't come and do this course again. I don't want that. It's a waste of time, it's a waste of money. It makes people sad and unhappy. So whatever it is, you still have time now. Today is 25th. Your exam is like 20 something. Put in whatever effort you need to put in. Get it done. Well, in whatever you're doing, make sure you're smart about it. You're being very smart about it. The aim is to pass right now. So if I'm not done, I'm still very much going to be having revision classes with you guys until your exams. And if you have the luxury of time, you can join that intensive class, so that's more intense, because I'll be doing from 8. A lot of people might want to go to church, but I mean, you can always watch the videos later on and all that. So I'll be doing 10 to 12. I mean, tomorrow, I'm sure we'll be doing like from 8 a.m. to 2 p.m. solving past questions like that, which we might make available for whoever might need it later on. So I think some of you might have SFM now. If the guy has not even started self. So thank you very much. Have a good one. Bye.
Thank you, sir. Bye.